Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Nimesh Shah and Michael Holland.
Welcome to The Tax Factor, the UK's top tax podcast. I'm Nimesh Shah, CEO of Blick Rothenberg, and it's great to be back on the mic after a short break. This episode also marks my very own hat trick. I hope you're not bored of listening to me, but 3 in a row for me. And whilst you are stuck with me again, I'm excited to announce a fresh new voice to the Tax Factor lineup. So drum roll, please. Joining me today is Michael Holland, superstar in US tax at Blick Rothenberg. And with so much happening across the Atlantic, no better time to bring Michael into the world of US UK tax. So welcome, Michael, and let's get to your specialist subject and a bit of a link back to the last episode that I was on with Ola, where we talked about Donald Trump's tariff trade war. He's gone one step further in threatening now that the US should impose tariffs on the UK, but because of the UK VAT system. But correct me if I'm wrong, Michael, I don't think that works like that in the UK, does it? And I think the president may have got the wrong end of the stick.
Yeah, that's absolutely right, Nimesh. It seems to be based on a misunderstanding of how the VAT system works and how it applies. Trump has really asked his team to go away and come up with what he's called reciprocal tariffs, which he thinks are almost a response to tariffs issued by other countries. And as part of that, somebody has misunderstood how the VAT system works and determined that that is some sort of tariff. Now, actually, most of the supplies to the US are outside the scope of VAT. The US has its own sales and use tax system, which isn't equivalent, but somebody's got to be in their bonnet about the VAT system being a tariff, and the US are looking at and suggesting a 20% reciprocal tariff to be introduced.
And I was surprised this story got so much prominence in the press, and actually a lot of the press just failed to understand the basic concept of VAT. And I had a couple of my VAT friends and colleagues at Blick Rothenberg saying, this just doesn't make any sense. But nevertheless, it's still giving prominence to Donald Trump and his use of tariffs. And maybe with his misunderstanding, President Trump might be in line for some new advisors if you are looking for a job, Michael. But one of his advisors is Elon Musk, and he's having his say with the IRS and getting hold of a mountain of US taxpayer data. What the hell does Elon Musk want with all this information from the IRS?
And that is the big question everybody is asking. This is, hot on the heels of Elon Musk and his department getting hold of the Social Security information in the US, which is a $6 trillion system. He's now looking to get involved with the IRS's system, which includes a multitude of personal financial information about all taxpayers. For those who aren't familiar, the US tax system requires almost every individual to file a tax return. It's not like the UK self-assessment system where you have to meet quite a high threshold. The US requires everybody to complete a form. There's an awful lot of bureaucracy. So that data is absolutely huge and will impact the majority of the US population.
How easily will the IRS hand over that information to Elon Musk? Because I know from my dealings and our dealings, I suppose, Michael, with HMRC, rightly so, I think, are so sensitive about taxpayer data going into the wrong hands, confidentiality, the sensitivity around that information. It is super valuable, as you say. But are the IRS just going to simply hand it over and job done?
Well, the way the US is currently operating, it's hard to see who's going to stand up to the president and Elon Musk. There have been court cases where people have requested injunctions and stays, but so far, no judge has been willing to stop Elon Musk and his team from accessing this data. The one thing I will say is the IRS's tax system is so outdated that actually getting hold of the data, if he's allowed, will be really difficult. One thing that we find when we work with them is that their system is only sophisticated enough to hold 2 years worth of tax information. So if you need information from our tax return filed more than 2 years ago, there is a literal paper warehouse somewhere that has that information. So even if he is allowed to access the data, I don't think it will be in the perfect format for him to immediately start applying AI and pulling it apart in the way that he might want to.
That's really interesting, Michael, about what you say that the US IRS is a bit more archaic than what I was expecting you to say. And they've still got paper files in warehouses. That is far beyond sort of the supercomputers I thought that would be dealing with US taxes. But you've been dealing with US taxes for all your career. What's your experience of the day-to-day interaction interaction with the IRS, and how does it compare with what we face with HMRC over here? Is it similar or is there a stark difference?
So there are similarities in the way that you can interact with the IRS and to the way that you interact with HMRC. So for instance, there are telephone numbers to speak to agents and to connect with people. Now, those telephone numbers have huge delays on them. Usually it takes up to an hour sitting on hold before you can even talk to anybody. What we've found is the level of sophistication of that agent on the other end of the phone, particularly when it comes to an international transatlantic type question, they just don't have the expertise or the experience. So even if you do get through, you're unlikely to get an answer. This system is not particularly robust. The number of times that you're cut off while you're being transferred is really surprising. But the biggest representation of how that system works is if we were to call the IRS to speak to them about a client's tax returns, in order to do so, they would ask us to fax over a paper wet signed power of attorney form before they would even discuss the tax affairs with us. Now, I don't know anybody who uses a fax machine anymore. We have specialist software just for this situation because nobody else sends a fax. Now, that is indicative of how that system works. HMRC obviously have a great portal that agents can use and taxpayers can use that's online. The US has some sort of portal, but it's not quite the same, and particularly when it comes to agents. But really, a lot of their systems are built around keeping that information secure and safe and only in the right hands, which means it's quite burdensome to get hold of it, which really makes the situation even more alarming that people are going to have access to that mountain of data.
And what you said about waiting on the phone, Michael, I wasn't again expecting you to say that with the super shiny IRS, but that's very similar to the stories we've been talking about closer to home. And maybe it's not been that long waiting on the phone for HMRC these days, because HMRC's latest performance statistics for Q4 of 2024 said that HMRC had met its target of answering 85% of phone calls and reducing its time to 11 minutes. And that's down from the average of 18 minutes year to date. So for a change, some positive news for HMRC and getting one over on the IRS. But the National Audit Office has said more investment is needed in HMRC. And the latest report from the National Audit Office said the big surprise here, but the UK's tax code is increasingly complex and it's costing business a staggering 15.4 billion a year just to maintain tax compliance with HMRC. And also HMRC's own running costs are rising as well. I know, Michael, you've been looking at some of the output from National Audit Office review and some eye-watering numbers about more money going into HMRC again. And what really stood out for you there?
I think I had never really thought about the cost of running HMRC, which really stood out to me as a huge number, but also the increase year on year of how much that cost goes up by was much greater than I expected. So I think that the information showed that there was an increase by 15%, which is around 563 million between 2019-20 and the 23-24 tax years. That number is staggering, and particularly when it's compared to HMRC's spend on the tax system for the 23-24, 4.3 billion that's listed as the HMRC spend on that, which is an astronomical amount of money.
Yeah, I can't believe that that's the amount of money that it takes to administer the tax system. Let's just take a moment to think about that. 4.3 billion against tax receipts of around 830 billion. And what the graph is saying from the National Audit Office is that the cost of HMRC administering the tax system is going up at the same rate as which tax receipts are going up. So that's suggesting there aren't that many efficiency gains to be had from the tax system. But I do, again, you won't be surprised to hear me say this, Michael, and our listeners, that I don't think they're helped with the tax system in the UK because it has been a political hot potato and the rules just keep getting more and more complicated with politicians tinkering with it. So something needs to be done about tax complexity. I'm not sure Rachel Reeves is the chancellor that we were all hoping for that may rip up the tax code and start again. And she's got something else to contend with, as does HMRC, because more and more people are liable to pay income tax because of fiscal drag, something we've been talking about for a long time now. And the HMRC projection here is that 700,000 more taxpayers will have to file a self-assessment tax return in 24-25. And that's increasing the burden on HMRC and the number of inspectors that can actually competently deal with those self-assessment queries. I think it's only going to get worse for HMRC with that additional work burden that they're going to face with that fiscal drag taking effect. It's also got quite bad for HMRC on this interesting case that you spotted, Michael, about exceptional circumstances. I know you do a lot of work across the borders with people coming to and from the US. And in this case, this was the situation of a lady who had moved to Ireland who may have overstayed her welcome in the UK because HMRC said that we want to make her UK tax resident. But there was a get out for her, wasn't there, Michael? Just talk us through how she managed to get out of this bind with HMRC because the number at stake was quite significant.
Yeah, absolutely. The thing that many of the clients that I work with really enjoy about the UK residency rules is they're very black and white. You can follow these rules and get a very clear answer as to how many days you are able to spend in the UK without becoming resident or before you become resident, whichever way you look at it. Now, there is a particular part of the tax code that says if you breach that threshold, if you are here for more days than you were expected to, or more days than the rules say, you will become a resident unless you are here under exceptional circumstances. And in my experience in the past, exceptional circumstances always has been really exceptional circumstances. I think the example that's given by HMRC refers to the Icelandic volcano ash cloud that happened a number of years ago and people were literally stranded in the UK. But actually, the application of that, I haven't seen many successful cases. But this individual was able to explain that given the facts and circumstances of why they had to spend time in the UK over and above that they planned to, and that was to look after a family member who was struggling and unwell, that would qualify for the exceptional circumstances and therefore shouldn't be considered when determining if the individual is a UK tax resident. I think the thing that stood out to me was initially I thought, why have HMRC picked this one? How have they picked up the data? Until I realized actually the number of the tax that was potentially at stake here because the individual had received some shares from their spouse. There was significant dividends associated with that. So actually this was well worth HMRC's while to inquire and to audit and to chase. And actually, I was really surprised by the outcome.
Yeah, the tax at stake was probably in the order of about 3.5-ish million based on the significant dividends that they received. And again, I think you're right. HMRC clearly perceived this because there was a big check at the end of this, or a potential check. But I think they might be licking their wounds on this particular point because HMRC have always narrowly construed exceptional circumstances. And I will just pause there because I know you mentioned the volcanic ash cloud, which I know cost your beloved Blackburn Rovers at one point, Michael, a superstar transfer. And maybe someone listening in can guess who that might be. But HMRC don't want this to be used that widely. In their manuals, they talk about very, very limited circumstances where you are physically prevented from leaving the UK. But this one, they said that there was a bit more discretion involved with the lady. She chose to come to the UK to help her twin sister through that difficult situation. And I think this case potentially sets some slightly concerning precedent for HMRC, especially at a time when there's lots of stories of people fleeing the UK because of higher tax burdens, those stories of 10,000 millionaires leaving the UK, and as you say, playing with the very clear rules in our statutory residence test. But there will be occasions where someone trips up, someone spent a few more days more than they should have done. And I think this rule on exceptional circumstances, we're going to see more cases on this because of that movement out of the UK. My advice would be, and I'm sure you would agree, Michael, is that don't try and rely on this very subjective part of the legislation. You should always maintain your day count. And I say to clients, if your day count number is, say, 90, keep it to 85, 84. You never know what may happen. You don't want to go right up to the wire, as this lady did do, and then have to rely on exceptional circumstances or recovering your phone data or your bank statements to prove that you weren't in the UK. These inquiries from HMRC on day count can be hugely intrusive. But nevertheless, a big win for the taxpayer on an area of the law that I think we'll see more to come on.
The Tax Factor from Blick Rothenberg.
That is all that we have time for on today's episode of The Tax Factor. Big thanks to Michael for taking us through the US tax system in brief. And I've learned something both about the IRS and Elon Musk today. So that is a win for me. If you enjoyed this episode of The Tax Factor, go and have a look at our sister podcast, Brave Business, currently in the top 3 of the investment and business podcast charts, hosted by journalist and broadcaster Declan Curry. The latest episode dives into the founder's mindset and what it takes to lead, grow, and adapt as a business owner. Tune in now on the Blick Rothenberg website or wherever you get your Tax Factor podcast.
I should also use this opportunity to do a shameless plug for my Brave Business podcast episode, which was all about US expansion and taking your UK business into the US. I had a great time chatting with Declan and also Brad Doling of counsel from Wilson Sonsini.
Well done, Michael, on your first appearance on The Tax Factor. You've done the double, The Tax Factor and Brave Business, and you even got to plug your other podcast appearance like a real pro.
Yep, I even have been given the official ending to read. We release a new episode of The Tax Factor every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can listen wherever is most convenient. We record and release these in 24 hours, so you always get the latest news and updates. If you enjoyed the podcast, please subscribe and give us a rating or review.
Next week, it's Roger Holman and Neil Insall, who are our Tax Factor dream team, and it's always a great listen. But for now, that's it for this week's episode of The Tax Factor. Have a great weekend and goodbye.
Thanks, goodbye.
That's The Tax Factor. If you enjoyed The Tax Factor, please like, share, and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.